Welcome to the next video. This video will be about the flips. So as you can see, I wrote this text right here that says every flip is a change of character, but not every change of character is a flip. What do I actually mean under this? Let's see an example for this. On the first example, price is moving in a downtrend, creating a series of lower lows and lower highs, creating supply zones over and over again. So let's say these legs are the 15-minute structure and these legs are the 1-minute structure. So we have this 15-minute supply zone over here. Price started to do a pullback to reach the supply zone. It tapped the supply zone, and after a tap of the supply zone, supply took over control from demand. But we had this demand zone, this 1-minute demand zone right here. Price reacted and rejected on this demand zone, which means demand took over control from supply again. So demand is control on this movement. But after this, price broke through this demand zone and changed character here, which means supply will be in control, because if a zone breaks, an opposite side zone will be created. And if a demand breaks, a supply zone will be created. And we call this scenario a demand to supply flip, D2S. So this is a demand to supply flip. So what did I mean under the every flip is a change of character, but not every change of character is a flip, is that, as you can see, a flip and demand to supply flip also changes character here. It changes character to the downside. But a simple change of character does not flip anything, because a simple change of character, let's say price reacts on this supply zone, it breaks through the less zone, but it doesn't react on that less zone, so it does not flip anything. It just simply changes the character. So once again, every flip is a change of character, but not every change of character is a flip. We have this bullish scenario here. So as you can see, price is moving in a downtrend here. Price tapped into a high time frame demand zone, because let's say price is moving on a bullish trend in this region. So yes, price tapped into this demand zone. After the tap, demand took over control from supply, but price tapped into this 1-minute supply zone. So supply took over control from demand again. So on this leg, supply is in control, but price broke through this supply zone with an inefficient push. So this means a demand zone has been created, which means demand is in control, and you can use this zone to enter in a trade. And here again, after the break of this zone and the change of character happens and the flip happens, you can use this zone to happen in a trade. Extra confirmation here is also the liquidity. If price does something like this, so creates a pullback, creates a liquidity just below the zone, that's an extra confirmation that the liquidity will be stopped by this supply zone, and you can easily set an order limit on this flip zone. So you just set an order limit here, and you can target the next unmitigated 15-minute zone somewhere around in this region. And the same goes on for the bullish scenario. If price breaks through this supply zone creates a demand zone, you can set an order limit on this demand zone. So you can set an order limit here. Extra confirmation is the liquidity here again. If price creates a pullback but can tap the zone, instead of tapping the zone, it creates liquidity. You will know that if price breaks structure to the upside, price will come back to mitigate the extreme demand zone and won't react on this decisional demand zone. So yes, these are the flip scenarios. Let's see some live examples for this. Okay, so let's see live example for the flip scenario. As you can see in this region, price is moving in an uptrend, creating a series of higher highs and higher lows. We have this extreme demand zone, extreme 15-minute demand zone right here that changed character on the 15-minute chart or the 5-minute chart, and it created liquidity just above the zone, as you can see. So this is a strong confirmation for this zone. After this, it just continues to broke structure to the upside until it reaches its turning point. And after a turning point, it turned into bearish trend. So this is a bearish scenario here. So what we are waiting for is that price taps this zone and creates a change of character or a flip after the zone tap. Okay, so let's see what happens. As you can see, price tapped the zone. I will just play price forward. Price reacted on this supply zone. As you can see, this was the last supply zone. Actually, we can use the wick. So this was the last supply zone before the zone tap happened. Price reacted on this supply zone. So supply is in control again. We have to wait for a flip or a change of character. So if price doesn't break below this low, and does break above this supply zone, that will be our flip scenario. Let's see what happens. Actually, it created liquidity, as you can see. We have this liquidity line here, perfect equal bottoms. So we have an extra confirmation. So we are just waiting for these equal lows to be swept. And after the sweep of the equal lows, we can expect the reversal point and the flip or change of character scenario. Okay, let's play price forward. As you can see, the sweep happened with this candle here. This is a perfect sweep candle. This is the last supply zone that caused this sweep and almost a break of structure to the downside. So if this supply zone breaks, or this supply zone breaks, we will have a flip or a change of character scenario. Let's see what happens. As you can see, price reacted on that supply zone, but couldn't break above that zone. So we are reacting on that zone, means supply is in control. As you can see, supply took over control from demand again. So if price breaks through this zone, a demand zone will be formed, and the flip scenario, a supply to demand flip will be formed. So let's see what happens. As you can see, a supply to demand flip happened, and we have this demand zone down here that caused the flip. And also it has liquidity here. So we are waiting for this zone to be tapped. I can actually set an order limit on this demand zone with 2 point pip stop loss. And I will just play price forward. Let's see what happens. Actually, price broke through another supply zone here. So this is an extra confirmation. This is a really, really strong zone that started the whole order flow that broke several supply zones to the upside. And it also created some more liquidity for this zone here, as you can see. So we have double liquidity confirmation. And it also swept the liquidity from this region. So this is a really, really strong zone. Okay, our limit is still here. We can actually target the next higher time frame zone, which could be, let's switch to the 5-minute chart, which could be actually this zone, because this zone is a huge supply zone, as you can see. So I will just mark this supply zone out and set this zone as our target point. Okay. Switch back to the 1-minute chart. We are waiting for this zone to be tabbed. Let's play price forward. Actually, we are tabbed into the trade. As you can see, we are tagged, and price almost hit our stop loss, but it did not reach the stop loss level. So we are still in the trade. We had a huge reaction. Actually, this movement, this candle was just a simple liquidity sweep. As you can see, we have liquidity in this region for equal candles. So as I talked about in the liquidity units, this candle is just a perfect liquidity sweep candle. Swap the liquidity from this region, and after the liquidity sweep, it can reverse the price and continue the overall bullish order flow. So we are expecting this supply zone to be tapped, and this trade is actually 1 to 10 risk-reward ratio. So we are risking 1% and we will gain 10% profit. Let's see what happens. Just play price forward. As you can see, price is moving up, ranging a little bit. I will just extend this zone. Play price forward. As you can see, it's creating breakout structures to the upside and immediately hit TP. So it ranged here, created lots of liquidity here also, and lots of liquidity here also. And this candle swapped that liquidity. And after the upside movement, swapped the liquidity from this region. And after the liquidity sweeps, it just continuously broke structure to the upside, and it did hit our TP, which was the 5-minute supply zone. So as you can see, this was the flip scenario. So once again, price did hit the higher time frame demand zone, which is this one. After the high-end time frame demand zone hit and mitigation, it created liquidity. After price swept that liquidity, so we have a higher time frame zone, first criteria, liquidity sweep, second criteria, liquidity creation, one more criteria, and the flip scenario, because this was the last supply zone that created a breakout structure to the downside. And the price reacted on this zone, couldn't break above, just wicked above. It isn't a break. After it reacted on that, supply took over control from demand again. After this, demand took over control from supply because it blew up to the upside with a huge inefficient movement, breaking through this supply zone. Limit order on this zone. Limit order did set. Liquidity sweep from this region. We are tagged into the trade. targeting the next unmitigated 5-minute or 15-minute supply zone, and bam, TP hit. So this is the live example for the flip scenario. See you in the next one.